Hi guys, welcome to MorrisBrownCrypto. I am Alan Chang. Let's get started. In this episode, we'll cover what happened to Bitcoin during this weekend, what's going on with altcoin Ethereum, Solana, Cardano, Chainlink, Ripple, why stETH got op-pegged, and what's STEPN gonna do with the decentralized exchange DOOAR. Also, latest news in the market movement. If you like my video, please don't forget to push the subscribe and like button below. I really appreciate it. Recently, Celsius has been focused on social media by hiding thousands of Ethereum being lost. Also, stETH has been op-pegged with Ethereum has become more serious. But based on Lido official, they actually think it's a good timing for a bargain. Now, let me explain what Lido's agreement and stETH is. stETH is a staking agreement from Lido, offering staking certificate for Ethereum 2.0. offering users gaining liquidity while claiming staking rewards at the same time. After Ethereum has successfully merged and the beacon chain is open for claiming, stETH holders can trade stETH to Ethereum by 1-to-1. Based on the mechanism, stETH offers liquidity compensation to stakes. Logically, stETH and Ethereum should be more pegged when the date gets closer. But the price of curve shows it's op-pegged to 0.954 per Ethereum. You might be thinking right now, how did this happen? According to researcher Hasu from Paradigm, the main reason for this drop in stETH is due to the settlement risk. Settlement risk is a type of counterparty risk associated with default risk, which is a possibility that one or more parties fail to deliver the term of the contract. If their users inject stETH into the lending platforms such as Crypto.com as collateral, when the market starts dropping, there might be a probability of facing settlement, which causes mass sellout of stETH from the curve pool, causing the unbalance. Other than the scandal this time, Celsius also lost $70 million from the stake count incident, and suffered a loss of $50 million worth of Bitcoin from the hackers hacking the Badger DAO. Also gets spilled that they emergently pulled out 500 million UST right before the Terra crash happened. Based on all these facts, the financial status of Celsius and the choice of investment will concern a lot of investors. Or we can always use them as an inverse indicator. The operation has been tough for STEPN after they cleared the users from China. To climb out of this death spiral, STEPN decided to make some upgrades and changes. Except for changing form mechanism last week, STEPN also announced it will come out with a decentralized exchange, DOOAR. Based on the official white paper, the process will be divided into 3 phases. First of all, they will build up a swap function in the STEPN app. There will not be an independent front end, also it will be open for Solana users only. After that, they will have a front end interface. Any users can provide liquidity for GST-USDC and GMT-USDC. Finally, any users can create liquidity for the pool of other tokens, which can be used in multiple chains. I personally like STEPN a lot as an app since it's easy, fun, and able to provide connectivity between crypto and our daily life. Hopefully they can success and climb out of this dilemma. A brick-and-mortar store interactive gallery called Web3 NYC will officially enter the 5th Avenue in New York on June 15th. This gallery has 300 NFT displayers. By purchasing a Genius NFT, you'll be able to get the control right of the displayers. Because it's in a public area, sexual images will be prohibited. And also the gallery will prevent all the fraudulent content. Not only being able to remotely display the NFT, the buyers who are interested can also purchase through QR code. There are 3 types of NFT displayers, which are 160 Alpha Clubs, which are 10 inches for 1.5 to 2 Ethereums, and 110 Degen Club, which is 21.5 inches for 5 to 10 Ethereums. Then there's 30 Collector Clubs, which is 43 inches, which has to be applied for purchase. Too bad it's still during the epidemic, or else I would really like to see this in person. If they can successfully prevent all the frauds, that would actually be something huge. In the future, they might even cooperate with different token distributors. Now let's check out the market movement. This is the hourly candlestick chart of Bitcoin. As we all know, Bitcoin crashed during this weekend. it dropped close to 16%. Why did this happen? First of all, let's check out the US 3 major leading indexes. As we can see, it also suffered through this tragedy. The main reason is the CPI on May came out as at 8.6%, higher than the market's expectation of at 8.3%, which created the highest point since the year 1981. Also, the market is expecting an increase in the interest rate on Thursday. So, it's not just the crypto market, it's the panic from the whole macroeconomic uncertainties. The good news is, there is still trading going on during the weekend for cryptocurrency, so the market actually digested a lot of drop already. But this doesn't mean that the bear trend is over yet, since the whole economy is still not stable. This is the daily candlestick chart for Bitcoin. We can see that the next support zone is at 26,500 for a short term. Also for the longer term, check out the weekly candlestick chart for Bitcoin. The red candlestick created last week clearly engulfed the previous one, and broke the support zone at the same time. As we can see, the next support zone for the longer term will land around 20,000. So we can actually set up a short position before the FOMC meeting. If the price bounces back to 28,400, wait for it to meet 26,500 to exit. If it breaks 26,500 support zone, we can wait for 20,000 to happen. This is the hourly candlestick chart of Ethereum. As we can see, Ethereum also faced the same tragedy and dropped around 27%. But the pattern is slightly different than Bitcoin. The main reason for dropping more is because of the base value, and also that the stETH has been OPEC might cause the market to panic, because people still haven't walked away from the trauma of Luna UST yet. So, never only focus on the technical analysis, the story behind the number is also really important. This is the weekly candlestick chart for Solana. Solana created a record of 10 weeks drop in a row and broke the support. The main reason is due to the whole monetary ecosystem. Also due to the latency issue caused before. So let's observe if there's any future positive news coming out. This is the hourly candlestick chart of Cardano. As we can see, it also dropped around 27% during this weekend. Even though it did a pretty good job last week by upping 6%, but it's still hard to dodge the bullet this time. This is the daily candlestick chart for Chainlink. It dropped massively around 35% over this weekend. But the fundamental of Chainlink is pretty good, as I mentioned last week. So we can actually buy in consistently every time it drops. This is the daily candlestick chart of Ripple XRP. Ripple is a centralized fintech company that builds global payment products that develop the XRP payment system. As we can see, it also dropped close to 23% this weekend. It is actually more steady than a lot of altcoins, which is a big plus. Now it's time to observe when the big economic event ends. Overall, the whole market is expecting an increase in the interest rate on Thursday after the FOMC meeting. The good thing is that crypto actually digested a lot of sales force during this weekend, but we still have to be extremely cautious of the whole market uncertainty since the CPI has reached the highest point within 40 years. Always think about how to get out before executing any trades. If you like my video, please don't forget to push the like and subscribe button below. Thank you for watching Watch Out Crypto. I am Alan Chang. I'll see you next time.